What's up, guys? It's your Money Cat. In this video, we're going to take a look at the FAANG stocks and do some technical analysis, because in order for tech to thrive, it will have to be led by the FAANG stocks just because of their market cap and how much space it takes up. So first we have Apple. Apple is in a very interesting position. Apple probably one of the hardest hit stocks, at least among the big techs. So right now, we are at 121. We went up 4% for Apple today. And during the process, we were able to take out this local downward trend line. We broke above it and we cleared it pretty well. So I'm going to get rid of that line. However, we are still facing the true test of breaking above this diagonal trend line right here, or getting rejected, which would mean the price would continue to fall down. A lot of this will depend on the overall market sentiment, because right now, most of the stocks are kind of traveling in a pack, meaning if the overall market is good that day, then all of them kind of go up. Right now, we have been in a very strong downward trend marked by lower highs, and that is marked by this trend line right here, and lower lows. So far, there hasn't been any confirmation that this trend has been broken. In order for Apple to show that it is reversing its trend, we need to pass a couple of tests. Number one, we definitely need to break above this one right here, this trend line, and that would be step number one. Number two, we have this horizontal resistance at between 125 and 126. And so we would also need to break to the upside of that one. Finally, number three, confirmation, meaning once we do break above this horizontal line, then we would need to confirm it as this resistance now turning into support. So price would have a little bit of dip, confirm this as support, and then bounce back up higher. So that would be step number three. So we are looking for Apple to do these steps in succession. Also, overall, I don't think anyone will argue that Apple is a very good long-term investment. So if we do assume that at some point Apple does return to all-time high and go past it, then at today's current closing price to all-time high, that would be about 20% gain. So a lot of value there for Apple. If we go to 1 year daily chart for Apple, a couple of things I like for Apple. Number one, these red bars on MACD, they look like they're trying to get smaller and smaller. So if that does happen, then we would expect a MACD crossover and positive momentum heading forward. Number two, we have this green line right here, which is the 180 days moving average. And you'll see that this line right here, that has come up to where Apple is providing support. So if Apple is able to bounce back up from here, which at least for today it did, then we can hope to see Apple bouncing up from here and breaking to the upside. Worst case scenario, even if Apple does continue to fall, until Apple breaks below this $110 support line, technically Apple is still just traveling sideways within this range of 110 to around 140. So until this happens, Apple is not yet in a downward trend in the big picture. We are locally, but overall picture, we are still just channeling horizontally. Next, we have Amazon. All these FAANG stocks have been kind of stuck in a horizontal channel, so you'll see this pattern a lot. For Amazon, we have been in a trading window of around $29.50 to high of $35.50. And Amazon has been all over the place, recently touching the bottom again. However, we were able to defend the support of a little bit below 2,900, and that's when we bounced off of the September sell-off as well as current sell-off. Furthermore, today when it went up 3.76%, it was able to take out this local downward resistance line, which is a really good thing. And I think Amazon will have upside in the near future. If we go from today's closing price to all-time high, then that gives us about 16%. But as you can see, if you choose to get into Amazon right now, you are getting in near the bottom of this trading window. So even if the channeling continues for a little bit, you are getting in at a much better price than, say, near all-time high. If you look at the 1-year daily chart for Amazon, I really like how the MACD is looking. I mentioned this in the previous video, but right now where the MACD is, it is, starting to bounce, but we are at pretty much where this red line is. If you see where the MACD touches this red line, besides right now, it was off of the September sell-off on the low point, and we had a massive bounce back up. And also it was back in March of 2020 off of that low, and also we had a massive bounce back up. So I think this is a really, really good place for Amazon, and I can see the history repeating where we'll see a MACD crossover and Amazon will continue its momentum up. And each of the 2 times that we did this before, we had a massive bounce back up, which I expect the same thing to happen. Next, we'll take a look at Facebook. Again, Facebook has been in a horizontal channel. Bottom side, I would say that's about a little less than 250, and on the top side, around 307. However, the key difference here is that Facebook has been making lower highs. So it has been in a slightly downward trend ever since hitting all-time high. So we have all-time high here, and we have lower high. Then we also have lower high, and this is marked by this downward diagonal line, this red line right here. What's worse is that more recently, the trading range has been getting smaller and smaller. So now we are just kind of traveling within this range right here. So because of that, Facebook isn't as enticing to me as the previous 2 stocks I've mentioned. And even with the 4.09% increase today, I don't see it as significant for Facebook. If we draw the trading window here, then it has done this a couple times previously, within last few weeks actually. So we touched the top here, and it went down rather quickly. We did bounce back up again, but we went down again. We touched the top here, and it went down within a matter of 2 days. And we went up once again, got rejected in 1 day, and now we're back up 1 day. So Facebook has been just bouncing back and forth between this support and resistance like a pinball machine. So even with today's increase, I feel like we haven't gone anywhere. In order for Facebook to do something actually meaningful, I would say it would have to, number one, break out of this trading range right here and reach close to this downward diagonal line to see if it can break above that as well. Until that happens, Facebook looks like it may not really go anywhere and just continue its crazy pinball machine-like pattern. For Netflix, we are looking at 180 days 4-hour time frame chart, and this is pretty much as perfect of a horizontal channel as you can get. The range is marked by 2 red lines right here. The top side around 560 or so, and the bottom side is about close to 470. Ever since back in July of 2020, Netflix has been range bound between these 2 lines, and besides this little portion right here, it has been absolutely following these boundaries to the T. So today, it went up 2.66%, not as much as other tech stocks or even the peers among FAANGs. We're in the middle of the range, so I would rather take something like Amazon over Netflix, because at least with Amazon, we are getting in near the bottom of the horizontal channel rather than smack dab in the middle. If we look at the MACD, it did actually cross over today. There is a tiny green bar right here. So that is a positive sign, and I would expect Netflix to at least go up from here for a little bit. But given how strong this horizontal channel is and just personal bias, I don't think Netflix has that much potential or growth ahead of them. I would expect Netflix getting stuck at this very strong resistance around 560, or even if it goes above it a little bit, not going too much farther than that. Finally, we have Google, which went up only 1.41%. I only say only because if you look at all the other stocks, especially in Nasdaq, this might as well be seen as a negative day. That's how much the overall market went up. However, this may be a result of Google's overall success. If you haven't already, go check out my video on Google. I talk about how it has lower volatility to the downside compared to other FAANG stocks, yet it is able to keep up with the gains among its peers. So the reason why it went up only 1.41% is because it hasn't fallen like all the other stocks. It was only down about 2% from all-time high, so it did not have the same kind of rebounding effect as the other tech stocks. However, if the market continues its rebound, I would expect Google to follow along and continue going up, just not at the same rate as others because, again, it hasn't fallen. You can see the green line right here, 180 days moving average. It is coming up near the bottom of where the horizontal channel right now is. So when this meets that support line and perhaps if the price is near it, it can get a little bit of a push from the below and that will drive the price up. In fact, if we zoom into 5 days, 5-minute chart, Google's chart actually doesn't look very good. Yesterday we had a pretty steep sell-off, and even if you look at today, aside from market open, Google was pretty much flat and actually sold off a little bit going into the close. So if you look at this individually, today, not that great of a day for Google, despite being up 1.41% on the day. That was only because of the market open and the stock actually didn't go anywhere. I would imagine because other stocks have sold off so heavily, most of the money will go there. But once that clears up, like I said, Google, much less volatility to the downside in my opinion. And once kind of everything settles down again, then Google will just continue its slow and steady way to the upside. And I think it's a really good long-term investment.